Greetings traders. In this video, I'm going to be breaking down how I made roughly around $2,000 in 35 minutes day trading the NASDAQ utilizing the Ict Judas swing. If you don't know what the Judas swing is, it is the only strategy that I trade. I've been trading it for the last year. It is the strategy that has allowed me to quit my job. I live on the beach. I'm out here in South America, and I make these sorts of trades 2 to 3 times a week. It's all you need to get funded. Ict himself said you can use this exact strategy that I'm going to share with you to quit your job in less than 90 days. If you've seen my channel before and you're not profitable, it's completely on you. I don't know what you're doing because it's getting boring at this point. You guys are overcomplicating trading. It's not that complicated. If you're here for the first time, welcome. Join, like, and subscribe. Now, without further ado, I'm going to share with you guys my entire strategy. This is my entire checklist. This is all you need to be profitable. It's not that hard. It's not that hard. All right. Without further ado, I am on the NASDAQ. I am on the 1 minute. This strategy works for Euro USD. It works for ES. I just prefer the NASDAQ. I like the volatility of NASDAQ. Okay. Now, with that being said, let's get to the checklist of the rules. The very first thing that you want to do is mark the high and low between midnight to 8:30. So if we come over here, keep in mind we are on the 1 minute chart. This is midnight, this vertical line right here. This is 8:30 right here. This is the highest high. It was at 4:19 a.m. and the lowest low looks like it was right at midnight, right? So that's the lowest low. So I mark the horizontal lines at midnight and 8:30. Okay. Now, next, we're waiting for one of those sides to get swept or a liquidity grab. And you might be saying, Andre, well, look right here. We had a liquidity grab right here. Right. This is true. This is a liquidity grab. I did not take this. Now, the reason why I don't take this is because I do not trade. I don't like to enter trades before 9:30, right? So you guys, you can't, this setup works, right? And I'm going to show you the full checklist of the setup. This setup would have worked, but I did not take this. Okay, so I only enter after market opens, all right? So you're waiting for one of these sides to get swept. You can see that this side got swept first, right? And so you would have been short on the NASDAQ. I did not take this short. I waited instead for this side to get swept as it was in my kill zone. I need to be entering past 9:30. Okay, so sometime after here. So because this short was taken, I'm not looking to, this is not my catalyst, right? This is my catalyst. I need a sweep of these lows. And so you can see that it works both on the short side and the long side. And the setup can form on both sides on the same day, which happened on this day. This was yesterday, February 26th, 2025. All right, so you're waiting for a liquidity grab or one of those sides to get swept. Next, you're waiting for a market structure shift with a fair value gap. I've explained market structure shifts. I've explained fair value gaps. I'm not going to, I'm not trying to be mean, but it's a little bit of beginner stuff right now. So I'm not going to break down what is a market structure shift, what is a fair value gap, because I've literally made 24 videos on this channel about what those are, so you guys can check those out. This is just for people that have already know ICT concepts and are just trying to find something that works, right? So this works, right? So I was waiting for a liquidity grab of this side, right? So I'm looking for a market structure shift with displacement after we sweep these lows. So we swept these lows at 9:14 a.m. I'm still not trying to enter until 9:30, right? So as soon as we sweep these lows, we need to close above this swing high, right? But after we put in this swing high, I need to close above this swing high, right? I hope that makes sense. If it doesn't make sense, guys, look up what is a market structure shift, or look at my channel, because I've already made it's not that I'm getting upset. It's just that some of you guys just come asking me the same questions over and over and over. And if you're new, I get it, but I'm giving you all the sauce. This is everything. This is all you need. All right. So if you just can't figure this out, then you're not gonna make it. Right. And maybe, I don't know, I just woke up and I'm a little I didn't sleep well, so yeah, maybe I'm a little harsh. But this is the market structure shift, right? You guys can see how we're making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low, higher high, ding, 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 ding. That's a market structure shift. That is the market literally shifting in a different direction, closing above a previous swing high, the market indicating to us that there is a potential that price is going to shift in a different direction. And because we took the liquidity all at the low of the day, right? Everyone who had their stops at the low of the day just got knocked out, generating liquidity that price needs in order to move up, right? It's basically like gathering fuel in order to make this push up, right? Now we don't just need a market structure shift. We need a market structure shift with displacement. What is displacement? It is a fair value gap. Again, I'm not going to explain what a fair value gap is, but I'll give you a quick example. It's just a 3-candle pattern where there's 3 candles and the low of one candle and the high of the other candle doesn't intersect, leaving a big fair value gap. Essentially, what it means is that price is moving so fast in one direction that it left a gap of unfilled orders that price will come back to collect these orders in order to continue on with the move that it wants to make, right? So you need a market structure shift, not just market structure shift with displacement. The bigger the displacement, the more consecutive bullish or bearish candles you see, depending on if you're long or short, that is a higher indication and a better, stronger confluence that you are on the right side of the market and the market is shifting and you want to enter in on this fair value gap. Now, normally I tell you guys to keep it simple. Just enter at the top of the fair value gap. Oh, okay. Well, let me go to the next step. Enter on the FVG. And I would just say, normally I say just enter on the FVG and with your stop loss below the low, targeting 1 to 2 risk reward. And you can see that we hit that, right? 1 to 2 risk reward, stop loss at the market structure shift, the swing low of the market structure shift, and targeting a 1 to 2 risk reward. So that's the whole strategy. Now this is 9:30 open, right? We opened right here. Some secret sauce. I guess I'll give you guys some secret sauce. If you ever entering in on a position and your 930 level is inside of your stop loss because 930 is such a magnet for price, because it's such an important level. Not typically, always I will just enter in on the 930 level because price likes to come back to that level, right? So instead of entering at the top of the fair value gap, you can enter in at this 930 level, giving you a tighter stop, right? So as soon as we had this market structure shift, right? So at 939, we had this market structure shift with displacement. Because I saw that and because we swept these lows, I said, all right, well, that's all I need to set my limit order to go long with my stop loss at the low of the day, right? With a tight risk to reward, and I can essentially target the high of the day at this point, right? It didn't. So yeah, this guys, this is a lot of free game. This is a lot of free sauce. I share this sort of sauce with the members of my Discord, so you guys can click the link in the bio if you want to join a free Discord of other like-minded traders that are catching these sorts of moves every single day. So this was 101 points on the NASDAQ, just on one contract, but I was copy trading multiple accounts. So this was 34 minutes, 100 points, 101 points. It's a little over $2,000. And this is the sort of setup that I'm looking for every single day. All right, so just to review, mark the high and low between midnight. Here's midnight. Here's 8:30, liquidity grab, market structure shift, enter in on the FVG, 1 to 2 risk reward. Now, just a bonus. So right here, so I only enter trades between 9:30 to 11. Ideally, 10 to 11 is even better. But just to show you guys, like how strong this stuff is, right? So low, high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. All right, so there is a market structure shift, right? So that is a bearish market structure shift. If you don't know why, look up what is a market structure shift, guys. And so now I'll be honest, I don't know if we would have gotten tagged in because so you wouldn't have gotten entry right here because there is the only fair value gap that I see. Let me just double check this real quick. Right, so if you wanted to take these shorts, right, so technically you can enter this trade anytime after 8:30. I just prefer after 9:30. All right, so that is, if we were looking for shorts, right, that's not a fair value gap. That's not a fair value gap. It's almost a fair value gap, and that's not a fair value gap. Oh, okay. Yeah, boom. It's right here. Yeah, I didn't even see that. I'm just now looking at this right now because I didn't take this trade, right? There's your fair value gap. Boom. Look at that. What did I just say? What did I just say? Mark the high and low between midnight to 8:30. Wait for a liquidity graph. Here's the liquidity graph of London high. Enter in, wait for a market structure shift with displacement, with a fair value gap. Enter in on the fair value gap. Here's our fair value gap right there. Boom. So as soon as 8:38 forms, right, there is your confirmed fair value gap. You would set a limit order right here on the top or the bottom of this fair value gap, covering the market structure shift swing high, which is also currently the high of the day, and you target a 1 to 2 risk reward. Like I'm just now looking at. I knew it probably worked, but I didn't check it because it's just not in my kill zone. So I was like, this stuff happens so much that it's like I'm happy with one, right? I'm happy with one. I know some traders that will stay on the market, stay on the charts for 4 hours, 5 hours, trying to trade 4 or 5 times a day. Like I just need like $2,000, one NQ. I'm good. I'm going to the beach, right? I'm good, right? But there's a short version. There's a long version. These are the rules, guys. These are the rules. If you're not profitable, it's like I'm not trying to be mean, but it's your fault, right? Because well, like what's the secret sauce? Where I mean, I've already dropped like even some secret sauce in this video, but like this is it. This is what I trade. There is no mystery to it. Like anyone that's trying to make it more complicated. Did I look at the daily? Did I look on the daily? Like, are we in a 4 hour SIBI buy side imbalance? Where's the draw on liquidity? Blah blah. No, I didn't look at any of that. I don't care. I don't care. Now, does this work every single time? No, obviously this does not work every single time, but it's got an over 70% win rate, and with 1 to 2 risk reward, that's all you need, right? That's all you need, right? So that's the strategy. This is it. That's it going short. That's it going long. It's the exact same setup. You take what you want. If you guys found this video helpful, drop a like, drop a subscribe, and join the Discord. Peace.